Right, our next speaker, Bora Tokyay, co-founder and CEO of Kavaken. Great.
Hi everyone, Bora here, co-founder and CEO of Kavaken. And at Kavaken, what we do is basically try to make the wind energy more profitable through using operational data. And why do we do that? Because I think I hope we agree, as a wind energy industry, we do have a profitability issue. If we're not aware of it, I don't think we can solve it. But one of the big evidences we have around that is big companies like BP and Shell deciding to kind of pull out because they can invest their money somewhere else, like oil and gas, where it is more profitable. So I think that's a major problem. And obviously, the asset owners are a huge player in this, and they've been our clients since the beginning. So we've been around for 5 years or so, serving more than 3 gigawatts now. So plenty of experience there, but I don't think they're the only players. We do have other players like the insurance companies, the financiers, the lenders. They all make up this ecosystem that overall makes the wind energy less profitable. And the way we see it, I think that graphic on the right there, that's kind of part of the problem, because we think we believe that data is quite instrumental in making everything more profitable. But the way the processes work now, it's very convoluted. I mean, if you're an asset owner, and I'm sure there are better examples of this, but industry-wide in general, to make a decision through the data, you have to extract the data, you have to analyze it, you have to ask some people, I don't know, put it in Excel, do it in Python, whatever, but it's a convoluted process until you actually get to a point of taking an action. And a lot of the companies here, a lot of the people here are knowledgeable to do that, but let's face it, this is not a very good representation of the expertise level in the industry. Overall, it's a lot lower than what we have in this room. So we're trying to always make that line more straightforward, going from data to action. And when you think about the insurance companies, it's even worse, because they know even less about the assets and how these things work. So when you have a failure, they send a loss adjuster. I don't know how it is with you guys, but a lot of my clients say they end up doing the work on behalf of the loss adjuster to calculate how much energy was lost. Seems pretty simple to us, but for them, it's really complicated. And then you get into an argument on negotiation and so forth. And similarly on investors, and we'll talk about this as well, but when they're looking to acquire assets, they rely on kind of manually prepared due diligence reports that can be improved, and I'll show you how we can make those improvements. So our solution is, the way we see it is we have this core asset management that you see at the bottom. So that's kind of like the core of everything we do. That's how we started out. And it has 3 main pillars. The power booster is the power curve analyses. The predictive maintenance, obviously we all know the terminology, and outages and reports. The whole point is we don't expect people to have time to look at every power curve for each turbine on a daily basis. Like nobody has that time. What we do is we let our machine learning algorithms do all that work and flag the issues for people to focus on. So again, the data is there. That convoluted picture you saw on the right there, sorry, can I take it backward? We let our machines do that convoluted piece. So at the end, you just go straight to the action. And, it's in a very easy, these are the recommended actions. This is the potential impact it might have, and so on. Once we realized that this works and people are actually using it, then we started looking at, well, what can we do in the other aspects like insurance? So now we'll talk about this in a bit more detail, but we have some offerings that makes life easier for the insurance companies, but not only them, but also the asset owners, so it can relieve a lot of the work from you. And then on the data-driven due diligence side, so instead of relying on these manual reports, can we do it a lot faster in an automated way? And I think we have some more way to go, and we'll talk about that at the end. But so a couple of case studies from these asset management. So I mentioned the power booster, I mentioned the predictive maintenance, but one of the things that we found new light on is these outages. And Patrick, you were just talking about the alarm codes and stuff. It's a pain in the ass. It really is. Trying to make sense of all that alarm data. So we're trying to use some clever algorithms to figure out when an alarm is going off, but it actually shouldn't be. So this is kind of saying my SCADA system is telling me something that may be potentially incorrect. And this is a good example. Now, when I talk about the example, it's going to become obvious because, you know, you can kind of tell, but figuring this out was the difficult part, and that's where machine learning came really handy. So we all know when the wind speed goes above a certain limit, it's usually around 22, 25 meters per second, the turbine actually shuts itself, right, to protect itself from extreme wind. And that gets registered as, I don't know if it's a Nordex turbine, it's a storm disconnect alarm. If it's a Vestas, it's called high wind speed, whatever. Something to that effect. And when people see this, nobody really cares, right? Because it's normal, because it should stop itself, right? The problem is, and the OEM doesn't care because it's an environmental categorization, so it doesn't get deducted from their availability guarantees, right? The problem is it doesn't always go off at the right time. And we've seen multiple cases, and here's just two of them actually in one farm, where we were getting their alarm, but the wind speed was nowhere close to that threshold. It was around 12 to 16 meters per second. Beautiful wind. You would be producing at rated power. Great. But no, instead, the turbine decides to shut itself. So this is one of the more interesting things where, as we dive more and more into the data, we're able to see and catch things like that. And now that we know this, you can hard code this if you want, right? This is a very simple if-else statement if you wanted to, but without knowing this, it's kind of hard. So that's where machine learning really helps to identify these anomalies, if you will, and catch them and then go to the root cause of it. So that's one example I wanted to share about asset management. But you can kind of tell what we're really excited about is this insurance part. So we have 4 offerings there. I'm not going to go into the detail there, but automated business interruption, we'll talk about that in more detail. Preventive risk control. This is, you know, how can we let the insurance companies benefit from the predictive analytics that we have? And then in turn, obviously, can that result in a lower price for the policy, lower deductibles, because they can see things and they don't have to pay for the full replacement of the equipment or the business interruption losses, but actually do something predictive in advance to prevent that from happening. And the data-driven risk survey. The parametric insurance is important, and it's getting more and more attention. So we're talking to a lot of insurance companies about this, and the reinsurers. If there's a low wind, they can insure you against that. But the way they do it now is, let's say they would rely on a third-party data, like the Metcas or Metmass at or the weather stations around Schiphol Airport, for example. Not necessarily rely on the data that the asset owner gives to them from their site. Now, what they're saying with us is, oh, you guys can actually act as a third party to show that, yeah, the wind was really low at that site. And then that makes everybody happy because the asset owner says, well, it's actually my site, not the Schiphol Airport. And they're convinced, the insurance company is convinced that it's neutral data. So these are the type of offerings. We're enabling operational data to become usable in the insurance sector as well. This is what I was mentioning to you about the business interruption. Again, convoluted process turned into something quite simple. I know the graphic looks fancy, but the whole point is actually that number there. So in the system that we have, you basically select which turbine had the fault, which periods during which it had an outage. And if you want to select some neighbors to get the wind speeds for different periods of time, you can use that as well. But it spits out the number, which is like, you see there, 2,400 megawatt hours. This takes only a few seconds, as opposed to extracting the data, sending into the loss adjuster, them coming back, and so forth. But what you see in the graphic down here, and the projection error after 3 months, we actually, to make sure the results are actually valid or accurate, we compare what the model would predict and what it actually was the 3 months prior to the outage, so where we have actual data. So the error of the percentage error is about 1.2%, so it's pretty accurate. But that's not enough. When we started doing this, people said, well, okay, fine, but then I have to do all these things. So I know how much energy I lost, but that's the gross loss production. I still need to take into account that that turbine wouldn't be 100% available. So instead of making an assumption saying 97%, why don't I use the availability of that turbine in the past? So that gets plugged in right there. Internal losses due to the cabling all the way to the meter, that needs to get deducted as well. Then you get to a net loss production. Then you need to do the financials. Is it am I in a feed-in tariff? Do I have a contract for differences? Or is it a PPA? Is it subject to the market pricing? That gets pulled in. And then you get to, you know, balancing costs and things like that. So this tool, think of it like a two-way tool where on the one side is the insurance company, the other side is the asset owner. The trick is it's based on real operational data. I think somebody used it in their slides. It's the one source of truth that everybody can rely on. So you don't have this discussion on, well, last year was a very windy season, or it wasn't. And in the 7 years, it's usually less windy. So get rid of all that, eliminate all those discussions, get to the bottom of it. And yeah, obviously showing nice things is great, but we do have a couple of case studies. This is one of them where it took about a month and a half for the parties to agree. You know, we came to that conclusion within a day or so, and it was a multi-million-dollar claim. Well, I always say it's a 1% difference between the loss adjusted values, and I think we're correct. We're more accurate, but we won't get into that. But it's close enough that everybody accepts it. So this is what we're trying to push into the industry a little bit. The other one is data-driven due diligence. So I don't know if any of you have been involved in acquisition of operational wind farms, but it's a process, again, a long process. It usually on the technical side, you have these technical due diligence reports, great, but as always, they're too slow, or it would be better if they were faster. And in our opinion, they're based on too many assumptions, whereas we now actually have data, so we don't need to make that many assumptions. So our solution is, if they're a client of ours, that's great. If not, we just extract the data, run it through our algorithms, and then we produce a report. This example I'm going to tell you, we produced it in 5 days. Now we're probably down to like 2-3 days. And most of that time is actually making the figures look nicer to put in the report. The real insights come obviously automatically. But in this case, so the main difference that we're saying, I mentioned the speed, that it's quick, but thorough. What do I mean by thorough? The traditional reports rely on plant level data. So how much did this plant produce compared with last year and so forth? With our asset management capabilities at the core, you can actually do this at a turbine level granularity. And I'll show you why that's important. And the third one is it's accurate, as I mentioned. Instead of assumption-based, it's actually data-driven. So one example of that, they were making the if you look at the table on the right, availability, they assumed it to be 97.9%, but you actually don't need to assume it. You can actually calculate it from what you saw in the last 5 years, for example. There are a couple of things that we fixed around that, but I think the real things that made a difference for this client, so it was the client wanted to acquire a farm, but it was being tendered out, so there were a bunch of other bidders, and whoever was going to give the higher price actually was going to win the tender. And it's these unique insights that really made the difference. And at the end, the client was convinced that if they were to acquire it, they can actually get more generation out of this than what the report said. And they acquired it now. Actually, funny enough, we are now monitoring it. We just started like last week. So we're on the hook to deliver on the things that we found. So one of the things we found was this. There was literally one turbine. So it was like 22 turbine farm, most of them around 3 megawatts. This one was later on added 6 megawatts or so. So it had a huge impact. And we saw that here at the bottom left here, it's not behaving as it should be. It's actually tilting as it reaches 9 meters per second or so. The power curve was shifting to the right. Now, you wouldn't see this if you looked at a technical due diligence report, traditional one, because it looks at the whole plant. But if you look at it one by one, you can see this type of thing. Now, our data, just by looking at where the data is landing, our algorithms can say this is a pitch problem, but when you want to convince the client, you need to show them extra things, which are the things on the right. But we proved to them that this was pitching too early, and actually the OEM was made aware of it, and they've since fixed it before the acquisition actually took place, so before the client took it over. The other one was around sector cutout. This is kind of interesting. So again, it's one of these things, if you saw an alarm code that said the turbine is stopped because of the sector cutout, everybody would say, okay, fine. The problem is, it's not always, so what is sector cutout? When the wind is blowing from a certain direction, it shuts itself again because it might be turbulent due to whatever reason. If the turbine thinks it's looking north, where actually it's looking 10 degrees northeast, then that's a problem because the turbine thinks it's in the sector cutout zone, but it's not, so it's missing out on good wind. Potentially even worse, it actually stops, or it actually starts working again when it comes out of the zone, when it actually should be stopped because the wind is turbulent in that direction. So one of the ways to catch it, again, look at the neighboring turbines and what degree are they seeing it, and if you see a big difference between the wind directions of that turbine against the neighbors, then that's a problem. So these were the type of things we captured, and we're not going to win all of these losses, but it was large enough. But it was large enough. I think it was like 4.8% overall that the client was convinced and they could bid a little higher to win. To be honest, it could have been another scenario where we said, look, stay away from these turbines because even though nothing failed, in the next 6 months, we expect 2 bearings to fail. So that could have been the case as well. Again, the level of granularity that doing a turbine-specific analysis versus a plant-wide analysis makes a difference. So one of the things we're testing now is this concept of a Cavacan score. It's not out yet, so all the other stuff is working, but this is kind of interesting. Again, the whole idea is, how can I get people who don't know how these turbines work as well to actually make credible decisions, like insurance companies, financiers, and so forth. So we came up with this Cavacan score concept out of 1,000. It has 4 dimensions, but as an asset owner, it allows you to monitor your risks on a equalized basis, on a standardized basis. Insurance companies, everybody understands if it's 900 out of 1,000, it's good. If it's 500, it's bad. So it kind of enables them to make those decisions quicker. And again, similarly for financiers, because the world that we see and we're striving towards is something like this. So why can't banks make financing decisions for wind power plants in a way that's similar to how they make decisions on personal loans? You probably get SMS, you probably get messages from your bank saying, oh, you're pre-approved for this. Why can't we do something like that for plants? I know there are a lot of reasons, but really, is it really that impossible? I disagree. Work in progress. Insurance companies, again, why can't they offer the policies and price and quotes kind of like what they do for car insurance? They put black boxes in cars so they can track the driving behavior. Well, we already have the boxes in there. We just need to make that data available to them. But not only available, we have to make it available to them in a way that they can understand, which is kind of what we're trying to do. And, all the energy companies, if everybody started making more money off of this, I think we would see those BPs and Shells coming back into the industry again, which is something we all need because of obviously the climate crisis that we're all going through. So that's all I wanted to say. We're going to be at Wind Europe as well. We're actually going to be holding a side event, and it's going to be talking about better insurance with operational data and AI. So if you're going to be in town, if you're going to be in Copenhagen, we would be really happy if you stop by and hear both sides of the story, both the asset owners and the insurance companies talking about what can be done to improve things. Thank you.
Thank you, Bora. Time for a question, if anyone's got one. Yeah, in the back. Over here.
Hi, thanks for the presentation. Sven van Pooyen from NG. Typically for inspection data, we see that O&Ms do it. And also as an owner, we want to have an independent view. We do it also. And so there I see a lot of double work in the industry.
Yeah.
Is it something that you're also looking at?
Well, so when we talked about this in Wind Energy Hamburg, when I explained this data-driven due diligence for M&A purposes, acquiring a farm, I got called up by a client of ours now and said, look, I'm coming to the end of my warranty. Can I use this to do that instead of going and inspecting everything? And I said, brilliant. I had never thought of that. So kind of, we hadn't thought about it, but they said, well, it's quite granular. You can do it at every turbine. I don't need to send somebody up there. So that's what they're using it for now. So that's the level that we've seen it at. And I agree. Like Patrick was saying, if we can bring that information together, that's going to be even better. We haven't gotten to that stage yet.
Thanks.
Great, thank you. Oh, Charlie's got a question.
Trying to use up my full quota of questions.
Yep.
I think one thing in the industry is actually people play with the uncertainty. So as an asset owner, if I know more than the insurer, and I get to choose which calculation I use,
Yep.
Then I'll make a larger claim than if it's
Correct.
standardized.
Yep. So I think I know the question. So we spoke about this with our clients and they said, look, rather than haggling back and forth for a month and a half, if I'm going to get my money quicker, fuck it, I'll take it. And to be honest, sometimes you win as an asset owner. In most cases, I think you would win because you kind of know more. But one of my clients that we did one of the validations with, they said, look, I told the loss adjuster that they said they were going to take last year's data. And I said, I love it because it was a very windy period, right? I knew we were kind of cheating, but it worked. But it doesn't happen all the time. It could be the other way around. And the bottom line of it is nobody really likes spending that much time on it. And from a financial perspective, getting the money quicker is better for everyone. So we're not an insurance expert. So we actually partnered with a broker who's been in the industry, wind energy industry for so long to get both sides of the story because just one side of the story is not going to solve it. So that's the answer.
Yeah. And I think if it brings premiums down, then it works.
And eventually it should. I think premiums is a bit of a, that's going to be maybe later stage, maybe with the predictive stuff because they need convincing, but at least we can bring the deductibles down.
Yep. Thank you.
We have a final question, if I can.
Oh.
With regards to data-driven due diligence, do you do absolute power curve assessments or also relative power curve improvement assessments? For example, the side-by-side method, where the turbine in question is compared against a reference turbine.
Right. So our approach is we're not out there. So the OEMs have a very critical role in the industry, right? I don't think anybody disagrees with that. We're not out there to beat on the OEM and say, oh, we're going to do a power curve verification and we're going to fail you and we're going to apply liquidated damages. We don't think that's the approach that works. It's very costly. What we do is for each turbine, we learn its normal behavior. So under which wind speeds, under which conditions, how much does it produce? And we start showing deviations from it as soon as it happens. So when you go to the OEM and say, look, this is the turbine, this is the power curve it had. In the last month, it seems to be deviating from it. Then they can't really argue back because it's the same turbine, you haven't moved it, nothing really has changed. There's an anemometer problem, there's a pitch problem, whatever. That seems to be a better approach. So we can do comparisons with neighbors, we can do comparisons against itself, we can compare to the theoretical power curve, which is in the due diligence, that's how we found it because the shape of the power curve looked awkward. So it hadn't shifted all the way to the right, but only after 9 meters per second it was shifting. Then that implies that it's a pitch problem because that's usually where that shows itself. So we can do all those, but the intent is not to go after the OEM and beat them to death, but actually say, look, this is probably an easy fix. Let's go ahead and fix it. It could be replacing the backup sensor anemometers with ultrasonic ones as opposed to keeping analog because a lot of cases around that as well.
Thank you for, yeah, very interesting.
Sure.
Yeah, plenty to talk about over lunch, I think.
Yep. Sorry.
Great.
Thank you.
Good.